Crazy moment in time be my jealous moment will be rapidly disrupted by the greats have, which is like a leader that kind of shows up both in what was happening in the outside world but also what was happening to us as founders.
Founders, funders, and operators, welcome to No Cap. I'm your host Talia, and this is where we're going to tell your authentic stories. Two incredible guests, one of which will be our co-host for the day. We've got Chris Tottman, who built, scaled, and exited Message Labs, one of Europe's very first SaaS businesses back in the early 2000s. And literally a day after his sale, he announced Notion Capital, which today has $1 billion in AUM. We've also got Sam Tidswell-Norrish, who helped found a private equity platform spanning venture, growth, and buyout strategies with nearly $10 billion under management. Now, he's the founder and chair of Opus, our community for early stage entrepreneurs that's rewriting the VC model. But Sam, before I pass to you, I want to get to know Notion a little bit better. Chris, I've got some questions for you. Think of this as a quick fire round. You ready? How much capital have you raised to date?
Over $1 billion, 2009.
How many team members are at Notion now?
Like 50% on the investing side, 25% in operations, and 25% on our sort of value-added platform, the people that build infrastructure to help founders, go on the journey.
What's the highest valuation across your portfolio so far?
Talking about valuations because they've kind of fluctuate. 2021 proved that. Think about it. We think about our numbers. So we have, I think, 5 portfolio companies that have more than 100 million of R, and the largest one has over 300 million of R. So, there's a real scarcity of privately owned technology businesses that are over 100 million. So that's the way we kind of tend to think about it, because the founders that's within their control. The valuation isn't.
Which exit are you most famous for?
My own exit, right? Incredible period. You find a pain and a value proposition that really resonates, and a whole wave of customers start adopting. But then after that is, how do you scale? So the Message Labs exit was just remarkable. It also happened in the financial crisis, right? So my earliest employer was actually Lehman Brothers, and they were going bust, right, at the time we were exiting. So it was like just a crazy moment in time, both in what was happening in the outside world but also what was happening to us as founders.
Okay, and one more thing before I pass over to you, Sam. I know the two of you have a personal connection, and I honestly just want to get to know you a little bit better, and I think our audience would too. So would love to hear from both of you. What are each other's superpowers?
I was going to say his ability to wear black t-shirts, but I've stolen that one. So I know a number of founders that Chris has invested in. I think if you asked any of them this question, they would say the same thing, and it's Chris's mind. Chris has a gift with his divergent mind to be able to generate solutions out of nowhere that continue to come. It's not just off the cuff in one conversation. He continues to come back to problems and to problem solve. And the founders that he invests in, they get that resource, they get that superpower to plug into his brain on these challenges. So that, I think, is what I would choose if I could steal Chris's superpower.
It's kind of an easy one. It's one of those leadership qualities that the greats have, which is like a leader that kind of shows up like every day. I think back in my earlier career, we would have called this like leading from the front. The behaviors, willingness to break through barriers and move forward and take people with you, commonly overlooked. But when you kind of look across all of the sort of functional areas, those leaders that are always there, present, working with people, leading from the front, they create a following, they create a tribe, they create a great culture, they create huge amounts of what I call like discretionary effort from employees that, want to be on the mission, that, also want to serve customers and peers and colleagues and so on and so forth. So, I see that with Sam in abundance. And also, you kind of hear it from all of the team members at Opus that I kind of interoperate with. So that would be my jealous moment in him.
I don't know how I should take that.
You can have a good cold.
Yeah, exactly. No Kool-Aid, just good times. But Chris, I'm gonna jump in and keep the conversation flowing. You built and sold Message Labs in 2008. The rumor has it, and I've never actually checked this with you, but I'd love to know that you started Notion the very next day, literally out the gates. And today, as you said, you manage more than $1 billion of AUM, which is an extraordinary effort in the venture space and testament to track record and your ability to build and grow winners with founders. Doing all of that, starting the next day after a big exit, growing the AUM, the persistence I know that takes, it takes a different kind of dude, it takes a different kind of person. When did you realize that you were different in that context, coming out of a corporate role and into the world you're in today?
Oh, that's interesting because that's kind of two threads of a question. It's like, yes, we did announce Notion the next day. I think it's just that sort of risk-taking entrepreneurial thing that we announced the day after because we have been pregnant with Notion for some time. We saw building products and applications and consuming them on the cloud from a B2B perspective, like as a mega trend. And so as soon as we had a liquidity event, we had two companies at the time. Message Labs got sold first. So we knew that we would then, instead of founding a new company, we would create a portfolio approach because we saw that huge amounts of transformation would happen. All of the previous vendors in the past would come under a lot of trouble either to disrupt themselves or be disrupted by these completely new companies, much like we're seeing with AI today, that are being built from the ground up. But on a personal note, from myself, when you're asking about like I'm a sort of different type of character, then that's really about the introspection of like, thinking about myself from a neurally divergent perspective, or like when was I different, and build things. I think the first one was when I was 25. My two co-founders, which are also my now co-authors, and we hired what we called the evil coach. We called him the evil coach because there was a dark side to the coach. He was unbelievably expensive, and the way I could position him is he was like those band managers in the 70s, like a Peter Grant or a Mickey Moke or whatever, where, they were doing some good stuff, but there's also some, buyer beware. He was into neurolinguistic programming, which is how your subconscious and your conscious interoperate together, which we were fascinated about. If you're going to work with people, you're going to build massive teams, you really need to understand psychology. So we went deep on that. And it was when I first realized that I could only think in black and white, which was weird. There's this concept of in time and through time, and in time, your time like moment that you live within, is in the moment, which is where I was living. Whereas through time is people that are really good at organization and planning, which I'm definitely not, right? So there were a bunch of factors. And then my youngest son got diagnosed with dyslexia, which was a short-term memory recall issue. And it was like, oh my God, that's me. So I spent probably 10 years of my career from an introspective trying to figure out how do I harness this power that I've got going on in my head. And so I'm very creative. I have a significant amount of energy. I'm a little bit like a flight simulator. So I'm constantly got an entrepreneurial itch that needs scratching. And so that was a really, really important thing. So the thought of, okay, we've just sold a company and now we're going to launch a fund, right? That just felt for me just the natural part of the continuum. There was this mega trend. We had a thesis. We'd built the largest SaaS business of the last decade. We'd exited it. We could be the investor for founders that they've never had before. That had real experience within what they were building. And we were still very young. We had a huge amount of energy to do that. And so there's kind of the two parts of that question is like, yes, did we announce it the next day? That's true. We did upset quite a few people, but that's part of the entrepreneurial thing. Particularly now we live in a social media world. People are upsetting people all the time, right? But the other part of the question is like, do I build differently? I could do a whole podcast on giving examples about the way that I kind of think about how do you build and scale businesses if you're not, that diligent, organized, comprehensive type of operator, which I'm not. I'm on the creative, divergent, acted type of entrepreneur. And you have to think about building companies in a fundamentally different way, or you surround yourself, which is what I do with highly complementary people.
Chris, you and I are kind of new friends. We have a shared interest, which we'll talk about a bit later, shared mission. I think we have a number of shared missions, in fact. But I knew you a long time before you knew me. It's a bit like that university moment where you're 500 photos deep in a profile of a girl you like. It's in my university time, but I've been following you for a long time. I've always liked the approach you have specifically really for go-to-market and founders advice through your various different newsletters and postings. But the thing that I really liked was your difference in approach to VC. At Opus, we are building a media business, a community business, and over time, a venture business. And at Notion, you really approach the value creation ecosystem very differently. How do you think about origination and distribution? Our view at Opus is that VC should not stand for venture capital. That's table stakes. It should stand for value creation in the partnership that you have with founders. And I know that Notion embodies that. And you guys have built all sorts of different parts of the model. You've got your value creation division, 25% of your team. You've got talent and Commel, included VC, AlphaGraph, Embark. Can you tell us a little bit about how you've built those things as part of the differentiated model?
Yeah, I think when we're talking to, one of the sort of say strategy plays when you're talking to founders is like, people don't want a better mousetrap, right? So that's not going to create a venture outcome. So do something that's first or do something that's kind of radically different. I think the venture game, I think you were touching on it, was like, okay, so you've got source, select, support, right? So if you think about that as a sort of value chain, but ultimately what you have to do is there are like 10,000 check writing VCs in the world looking for the only 100 companies that you should be fighting to invest in. And that becomes like a super competitive fight. So if you think about what are all the sort of touch points around there, you might innovate around a number of ways, or selecting or supporting, right? So we think about that. So we were like the first opportunities fund in Europe. So we were the first real value added platform for B2B. I mean, there are some incredible brands that I love. So like, I think Seedcamp is an extraordinary company, for example, and back in 2010 when we were around in the same market, I felt they inspired me because they brought the industry together. That's so how you want the industry to work. Whereas before, people would compete and not talk, and it was all proprietary and so on and so forth. The market's moved on a lot. On the ESG side, we're really the first to go big on ESG, and included .vc has got over 100 people into venture capital from diverse backgrounds. This was one of a number of experiments that we were playing with at the time. But this one came to the fore. I have this concept around these things only really fundamentally become real after a validation period, but also what I call the cornerstone. The cornerstone is the person that is on the planet to fulfill this mission. And in this case, it was Nikita Thakrar, he became the CEO of that project, who just builds this extraordinary company. So I think what happens is we want to basically have multiple touch points in the ecosystem that enable us but we're more accessible. We have a role that is well beyond just what you would classify as sourcing, selecting, supporting. And, I see that a lot in the Opus business. I think what you're doing is kind of extraordinary, because, you have this, persona of founders that's like the bedrock of how companies are being built and industries are being served, and you're supporting them in very, very different ways. So I think that's why we have kind of a lot of intellectual and emotional alignment, because there's a deep level of respect about who we are, what we do, how we go about it between ourselves and Opus. So but I think about that, are we first or are we different? For example, our associates are able to write out angel checks that are issued off our balance sheet, for example. No one else does that. So we have this free thinking way that we think about, how do we enable the various different market participants to think about Notion and engage in Notion in different ways. Ultimately, what we're looking to do is to find a differentiated position where we can find a unbelievable founder doing a really difficult thing and be able to take a view and invest in them, before anybody else.
All of that resonates super deeply. I love the little exclusive nugget we got in there, but specifically around that point on differentiation. When I started my last company with a group of people in the private equity space, we all agreed at the start the world didn't need another private equity firm, and I agree That is kind of the same for VCs. The world doesn't need another VC, unless, of course, it's doing something wildly different and it's supporting founders in a way they're not getting it elsewhere. Opus, we have our own view of that, and we believe that community is the greatest catalyst for, well, relationships are the greatest catalyst for output. And so that's really forming the rock bed of what we're doing. In your mind, what's the most valuable support for founders that most VCs don't provide or get wrong? What could VCs be doing better?
This is a really interesting, the market. There's not one market, so we're not really, the question's so broad and the market is so broad. So in some ways it can be paradoxical, the answer, which is, so for example, probably the founder that you back that is going to return you the most amount of money. Conversely, the founder that needs the most amount of support from you probably is going to create in the lower end of the kind of returns profile, or the thing that they're building and supporting. Now, if I've just separated the market very crudely into two different concepts, I think every founder, I have this thing that, and I say this frequently when I chair the all-day meeting at Notion, is that like the shit is hitting the fan all the way across the portfolio. In every logo, in every function, for every leader, the shit hitting the fan somewhere, right? And we're aggregating all of that. And so first thing that you have to have a huge like tolerance for, bad stuff happening. So because, as you know, as founders, survival events will happen, every fast and furious, whether if they're not every year, they'll be every 2 or 3 years, right? So I think it's about how you show up. So, the founder ultimately wants to have a group of trusted advisors that has that founder empathy, that has a high tolerance for risk and for issues going wrong. Their behavior, like their personality doesn't change dramatically depending on whether it's good news or bad news, right? I think that's a human trait that is going to need to coexist regardless of the sort of conditions that are happening. What was extraordinary during the COVID period is how humble we were and inspired by the qualities of our founders. Like, we just take a moment just to go back there. It's just like awe-inspiring, right? Where their lives and the lives of them and their employees and their customers are turned upside down as the commercial realities just completely flipped, right? So I think on the other side where, okay, you're going to take a founder that needs to become a founder CEO that needs to become a public CEO, then you can see that a founder or a human being is going to go through this extraordinary journey. And we have this thought process of the fact that this individual or those individuals are going to have to reinvent their company several times over, which means they are going to need to reinvent themselves several times over. And so even for those founders that I put in that category, that those that need the least amount of your support, they still need your support, not just on the human side, but you can build infrastructure that enables them to plug into or be at least aware of the different types of people that they will have within their business or supporting their business as they change stages, or as they go through different iterations of scale or complexity. For example, their leadership will change. The technology platforms that both they use or that they're threatening them will change. Their advisors and their infrastructure related to their legal or their readiness to be a public company or to go towards an exit will fundamentally change. There's an obligation on us, or we believe there is an obligation on us to provide and build and support that infrastructure as best as we can. So that's kind of the mission that we bent on from 2012 when we built our value-added platform that's led by Stephen Miller Notion. And so I think many, a lot of VCs probably struggle at the first point, is that the human bit is that in times of trouble does their behavior change materially, right? Because they're threatened at the same time. They're slightly different incentives, right? And so I think that's probably, it's the human qualities are the ones that probably come under the most amount of pressure, because what we do is fundamentally very difficult. What founders do is fundamentally very difficult. And so the marriage will be put to a test
Mhm.
And founders would probably come up with the fact that few of their investing partners meet their expectations. Um, Not only how they support them more generally, but how they support them in difficult times, I think.
Yeah, agreed. One of the things we talk about at Opus is kind of the mission that we're on and who we're there for. Our community is for backable founders, but that doesn't mean VC backable at all. It means backable by any type of investor. And if Notion or any other VC look at 1,000 backable businesses, you might invest in 10, law of probability. And you're right, within those 10, there's probably the three that don't need help because they're outperformers and seven that have a range of more help required. We're there for the 990, create the anti-portfolio or not, trying to think about on our mission how we help lift all boats with the tide. You and I kind of came together around a shared mission for helping people get going in the very early stages. So I'd like to talk about Embark for a moment. We have just announced the coming together of Embark and Opus. Embark is an amazing community of the earliest stage of founder, people even before they get into founding. But the mission was so aligned with what we're doing at Opus, we had to do it together. What led you and Aria and the team to form Embark? What was the mission you were solving for there?
Yeah, that's a great question, and what an incredible community. I think the whole coming together is going to be phenomenal. So I think as I alluded to earlier, at Notion we have this thing where we kind of empower people to create stuff, which is why we're able to create all these kind of extra little projects or units. And Ariel's on staff in the investment team, and he had a friend, Daniel, who was one of the co-founders, and I went and did a talk to their sixth form business club of their grammar school. And so this relationship was forming and getting a little bit deeper. And I thought, God, these guys are like incredible. And they talked about this sort of very classical thing that I completely related to and understood, because when you're building really, really big companies, you're hiring a phenomenal amount of people. Then you meet these people all the time, which is like, if you're really, really bright and you're educated in a streaming sense, then there's this social normative thinking that you're all going to end up in investment banking. That's kind of what you do, or you're going to end up in Big Four consulting. And what happens for a large percentage when they get there, they go, "Oh my God, is this it?"
The
Both
right.
Ariel and Daniel had found this, and Matt, the other co-founder, is technical, and so that person then starts to look around and think, "Well, there's the other people like me." If I think I'm not going to be doing this, what am I going to do? Well, there's this thing like they have what I call like this biological clock, which is like the biological clock is saying, like, I need, and in my generation, it was I'm going to run my own business. So now that word might be different. It might be I'm going to found a company, right? But the inner voice and the emotion about it is pretty much the same, right? And so, but they don't know what it is or who they're going to do it with. But they have this clock that's bum 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 bum. So anyway, they'd formed this community, and then I said to Ari, "Listen, I think this is incredible." And the way I positioned it is like, you're building EF without the fund, but I've got the fund, so that's cool. This is fantastic. So I thought Aria and Daniel and Matt were incredible. I also understood the psychology of the sort of future founder type persona, because I'd hired thousands before. It fitted with Notion in terms of how do we get access to incredible people earlier and earlier and earlier. And then I asked them to send me some like a lookbook of some of the members, and like it was this head blown moment. It was like oh my God, these people are incredible, and they're having these meetups, and they're asking me, can they use my content? Can I do a Zoom or an AMA, and so on and so forth. So anyway, so it became a very easy decision to help them finance the company, and then we went off on a great mission for a couple of years, and then now we're at this new juncture, which again, as you know, I'm tremendously excited about.
Yeah, me too. I think the intent with which we're building at Opus is kind of undeniable, and the passion with which Aria, Daniel, and Matt and yourself have built Embark is going to make for a very potent collaboration. What excites you most about that? Where do you see the Opus Embark joint venture going?
Well, I see a lot of parallels with Notion actually in the way that kind of we think about like the longevity of the strategy. We think of ourselves far more than a fund, right? So it's kind of more around how do we invest in people over a much longer life cycle? How do we support them over a much longer life cycle? How do we enable to build a team and an organization that is multi-generational that outlives the founders of Notion, right? So if you kind of think about that as a kind of mental model or a context, well, Opus has built this just incredible infrastructure that supports these founders that are further along the life cycle than the Embark founders, right? You know, they have a genuine business. They are building a company, be that in technology or supporting services and so on and so forth. You know, they have product market fit. They have customers and all of the things that come with customers that become challenges like, you know, pricing, packaging, monetization, support, technology, infrastructure, all of these things. And you're looking after really the sort of meat of our economy, right? This is the lifeblood of the emerging companies for the next decade. You know, what happens before that is you just have this much wider part of the pyramid of all of these like individual bits of talent that are thinking, well, I want to build a company like Opus. I want to build a company like Message Labs, like Notion, like, you know, like Muse, like, you know, like Go Cardless, like Paddle. Where do I get to? Where's my co-founder? I'm not technical, so I need a technical, you know, or, you know, I'm technical. I don't understand go to market. So you're like we have done at Notion, you're entering the life cycle earlier. You're capturing and supporting the deep-rooted needs of individuals at that point in time. And so, you know, the start of that journey for them and for you is elongated, right? And that means that your critical infrastructure that you're building, that your existing members love today, gets exposure to increasingly more people, right? So I think you know, I see the parallels with the way that we think strategically with Notion, and so you know, I'm tremendously excited about how it's going to play out.
Me too, me too. And Chris, we'll flip the script now a little bit towards kind of media in venture. You're a big personality. You're well known for a whole host of things. And you once said that working with other creators was one of the biggest joys of your life. And I think the word creator has many different definitions. At Opus, we see founders as artists, creators in their own right. But can you tell us a little bit about that joy? And then what is the role of media in the Notion capital strategy?
Yeah, good question. It's so funny because when we first met, you used analogies that were so similar to mine. Like I mentioned the band manager earlier, right? I was thinking, a few founders together. It's a bit like, you know, they're jamming. They're like, you know, they're trying to figure out some software or
Yeah.
some hardware or whatever, and then, you know, slowly but surely it comes out. And then they've got to deal with this industry called the investor industry, right? And they're like, who's helping them as the middle person, right? They just want to build software, and they don't want to deal with all this other stuff. So it's quite funny. But on the creative side, look, you know, my original co-founders, I touched on it earlier. They wanted to get the band back together. We wanted to get the band together, and we've worked on and off for 30 years. And so we decided that Richard loves writing, so we're going to write a book, and that ended up becoming the go-to-market handbook for SaaS leaders. And then they asked me to come out of LinkedIn retirement, which was quite funny. So I retired from LinkedIn the day my daughter graduated from university because I refused to pay my elder kids to finance their way through uni. So I said you had to get a job, and the eldest son dutifully got a terrible job, but a job nonetheless. And then I gave him a little bit of money to feed himself. And then she said, "I'm not going to do this. I'm going to starve and get a first." So I thought, oh, I've got a problem. So they ran my social media while they were at uni, which was a great hack. And so the thing about creators, and so I've create and collaborate with more and more creators. The thing about creators is the way that I think about it is like it is the 10 100x learning hack, right? So if you hear someone talk about best practice today, that will be like a 10-year-old thing, right? 10 years ago, 15 years ago, a person would have fallen upon a thesis that they then hardened and sharpened and codified into a thing that then got resonance and jumped over the chasm, right? And then became the normal way business got done. And then it would be called best practice. When you're dealing with creators, they're quite often noodling like at this really the edge of their kind of niche or their thing, right? And they're got energy and passion and curiosity, and they're putting themselves at risk. They could be doing something else with their time because time is a finite commodity. But no, they are, and then all of a sudden pop, this thing comes out. So whereas I surround myself with creators of all sorts of different types in all different sorts of areas or niches, then it's like a learning hack. Not only do I have some sort of kinship with them on a certain level, but it's like you're just at the forefront of where things are being like invented or found or discovered. It's a real learning hack. The other benefit of it is, of course, we all operate on these mathematical systems like LinkedIn or Substack or Instagram or whatever it might be. When you want to understand and maximize the benefit of these mathematical systems, then you think about the math. So, it's like in LinkedIn, we know how to game the social graph on LinkedIn. And the more creators that you work with, the more that the benefit of that hacking, the behavioral hacks that you have, pay off. So I don't get 50 million impressions on LinkedIn because I write amazing content. Some of my readers would say that I do, but others probably find it annoying. I get it because we make the mathematical system work for us rather than the other way around. And to do that, you have to kind of think about it in sort of mathematical terms. So I think I'm answering two questions there. It's like, one, I think working with and collaborating with creators is just a joy. It's just, I feel like every day I'm learning multiple things from multiple people. It's a proper learning hack. And it gives me the advantage of knowing things way before they perhaps get to prominence. Mathematically, it creates a huge advantage. For example, if Mr. Beast posted about your fireworks company, you'd probably have a problem supplying the fireworks to all the people would bought them. If I support somebody's content and support somebody's content brand, or for them to get more exposure, then they would clearly get a mathematical boost that would be a multiple of what they were doing before.
Okay, so quickly jumping in here, because this is a question that I hear from founders literally all the time. What would be your best advice for people who are just trying to grow their LinkedIn network? Like, think about getting to the first 5K, 10K followers, anything more than just collaboration.
I've got a handle on my own. So I think I've got like 135,000 followers on LinkedIn. I do about 50 million impressions a year. And then on Substack, I have a newsletter with my co-founder, Ruben. We have 35,000 subscribers and we get about 250,000 readers a month. Probably the most important creator relationship that I have is Ruben Dominguez Ibar. So I saw him publishing online. He was a level 1 associate at a Madrid-based insurance venture capital firm. It's very easy to see that someone's mathematics on LinkedIn is very hot, right? Because you can see impressions, comments, reposts, right? I just saw this extraordinary level of mathematical performance. So I messaged him and we jumped on a call. His when he relates this conversation, it's so funny. English wasn't his first language. He's an introvert. I'm an extrovert. There was less chemistry on the first call, but because I am Price's law is the law that's driven my entire career, which is a bit like a power law, right? And I said to him, listen, I'm going to fly over to Madrid and I want to spend some time doing creative sessions with you. He said, I looked at my phone. So then I messaged him and said, right, my wife are flying out. This is where we're staying. Can we set up 3 sessions? We'll bring some ideas. I brought 11 ideas to the session and we implemented 2. He's just the most extraordinary creator on LinkedIn. And his view was, look, I'm nobody and I have no authority online. And this is a platform with 1.3 billion people or 1.3 billion profiles on it that are all connected. Why is anyone going to take my phone call? Why am I going to get invited to the party? He decided that he was going to source really high quality content and he's going to post it, and people buy into the aggregation of posting because they go to you, because that means they don't have to look for it themselves, right? And then you can see there are richer or deeper formats of that, for example, depending on which platform you're on. And yeah, he does 200 million impressions a year on LinkedIn. He has 100,000 subscribers to his Substack, which is called the VC Corner. So the playbook for doing this kind of already exists, but you have to be a student of the system. You don't have to. People will obsess. So someone today will be writing something that is unbelievably important, that might be related to oncology, stroke, cancer, and that might be unbelievably meaningful, and no one will see it. They will have spent 3 months writing it. They would have poured their heart and soul over every comma, every colon. And then I will post a brain dump about ICP, and it will get, 1 million impressions on LinkedIn. It's just like, so you have to become a student of the system, not just the content itself.
I've spent some time with, or at least chatting with Chris Donnelly and those that have taken Chris's course, and yeah, there's a lot of science behind it. It's you got to get technical or be willing.
And they change the science.
Yeah, they do. All of a sudden, the algorithm hates videos, and you got to adapt.
My middle son did work experience with my elder son, and he got banned from LinkedIn in 48 hours because something to do with a login, or like his passport photo. We have no idea. It was so funny, so I had to post about it. But the largest post I've done was a video. It got 15 million impressions on LinkedIn. It was hysterical.
Wow.
But equally, I've also had my social graph reset to 0. So you wake up one day and everyone that you know doesn't know you, if you like. They're not getting you in their feed. You're not getting them in your feed. It's like these are the funny things of dealing with these platforms.
Unbelievable. We're going to come towards the end now, and I want to touch on some real practical advice for founders. What do you see as the most important prerequisite for raising money if you're a founder?
The thing that probably confuses people the most is that you are the pitch. So I am the world's worst at posting the best stuff about how to build a pitch, right? So these are the materials, right? So people love my, pitch material type content, but the founder is the pitch. They are the pitch. It's you. You're the pitch. The materials are the supporting. Are like a supporting cast, and the things that the formats that people use in order to get their pitch ready or investor ready. What I try to educate people is that this is a editing function. This is to try and get all of the messy noise out of the pitch. This is to simplify if you just follow this format and turn up and pitch, it won't work. You are the pitch, and the formats that you pick up on LinkedIn and Substack and on YC's resources are incredible. So these are ways that you chip the noise out of your pitch. So that's the first bit. You are the pitch. So that can be unhelpful, right? Because what does that mean? But then the second mistake that is made is that you forget who you're pitching to. So this is the whole respect the audience challenge, right? So the audience is an investor, and the investor in the main, if you're talking about like institutional money and the best angel investors in the market, geographic market, wherever you're pitching to, are very, very similar, versus the sort of generalized market, is that they are obsessed about returns. So you get pitches where you're being so self-indulgent about explaining your product, right? Who does the audience care about your product, right? I, as an investor, for example, I'm a market thesis investor, not a technical thesis investor. I don't genuinely care for the product. I'm not interested in the product, right? So most investors, if I ask my investor relations partner, Charlotte is our partner who runs investor relations at Notion, and I ask her about all of our value-added stuff and sort of what do our LPs care about? She goes, Chris, I only care about returns. So you're pitching the investment proposition. to investors. And what drives the investment proposition? Their returns are driven by the power curve. And what drives the power curve is the ability for you to consolidate markets to your platform, right? In an incredibly fast growing, capital efficient way, right? And so you are the pitch, it's the investment proposition that you're selling. How do these people make an incredible amount of money? And then the models that would be associated with creating an incredible amount of money is how you hack growth, how you create flywheels, network effects, all of those aspects that might be related to the business model or the thesis of the business model, because most pitches are pre-revenue, right? If you look at the pyramid, most pitches have no revenue and then less and less and less, right? So, or more and more revenue, less and less logos. So at the beginning you're selling the thesis, and later on you're selling the math. But you are the pitch. The pitch is the investment proposition to an audience that's trying to figure out, how do I make a lot of money? How do I make a lot of money is related to the power curve. The power curve is driven by you industries running on your rails to the point where governments want to regulate you because you're a monopoly. Those are the sorts of things where, that's when I like to use the capitalist word, where some of the audience wince because it's apparently a less favorable term these days. Whereas I am a capitalist. I'm a venture capitalist. There can be anything more true. So I think that's the thing. It's like, stop being self-indulgent about your product. Start being very indulgent about your audience. What drives them? Your pitch needs to relate to the ability for you to create an extraordinary company from enabling a huge amount of market participants to adopt your way of doing business, and that you create increasingly more market power where you are a price giver to that market versus a price taker. Those are the sorts of things that should be in the pitch.
Well, firstly, thank you for that. There's some real nuggets in there. We yesterday we kicked off on Monday even. Olamide runs, as our head of investor ecosystems, a fundraising bootcamp. It's a 10-hour boot camp to help founders get raised ready. We do one a month, and it's unsurprisingly exceptionally popular. I'm talking like hundreds of people signing up for it, and it's only for Opus members. But on Monday, we had a number of people join, and they were talking about many of the things you just mentioned, and particularly putting yourself in an investor's shoes, and thinking about returns profiles and power curves and so on. But I think one useful thing, while you are the product ultimately as the founder, different investors have a different view on metrics. What would be your single most important metric for an early stage investment?
Oh, well, I mean, we have pretty good ways that we think about empirically scoring stuff. So, for example, in the AI wave that we're in at the moment, and bearing in mind 60% of money's going to AI, right? Which means everybody else is fighting over a diminishing amount. So in AI terms, the thought, and we're more in the application layer, right? So that's just to caveat that, rather than the infrastructure layer. You can get high acquisition and high churn, and you have high churn because you have low engagement. So I think there's a sort of combination of factors. Catnip for investors is growth rate. So something is growing extremely fast. There is a little bit where, a large percentage of the market where your questioning brain dulls down. A lot of my answers are answered because customers are buying this faster and faster and faster. Do you see what I mean? Whereas if growth doesn't exist, then you're questioning, well, how's this, is there a need for this, or is the pain big enough? Is the product too fat or too complicated or too thin or whatever? Lots of questions. But growth tends to autonomously answer a lot of the questions that an investor would ask. Well, it's growing so fast, so there must be something going on here. So I think growth rate is the former, but people are increasingly focused on engagement. What is the engagement within the product? And so that's pretty prominent in the AI thought process at the moment, because we're in this era at the moment where so much of the prior world will be rapidly disrupted by the cost of building a product heading towards zero. And so, like, what becomes a premium feature in the future? Does a premium feature ever exist? Right? What does that actually mean in the new world? So I think growth is normally the number one factor, but when you're testing growth, you're testing the sustainability of that growth, and that's going to come from the engagement metrics within the product.
Thanks, Chris. That's clear, very clear. Now people know the way to your heart. Fortunately, I've got lots more time I'm going to be able to spend with you over the coming months and years, and I'm going to continue to pick your brain. From my side, a massive thank you for joining, and yeah, a big thank you, Chris, for your friendship and support.
That's great. Well, we can do another one. We've got my new book's coming out in a couple of weeks. The Big Book of Brain Dumps, which is like the first book had 10 workbooks, and this one's got 70 workbooks in it. And so, like, how to grow, how to run, and how to raise money for your startup. So we can have a revisit, spend more time having fun.
Well, I'll tell you what we will do. We'll do a bulk buy, but only if you sign them, and we can have them in the library and Opus House for founders to buy them. Well, and it's available online in all good bookstores, I assume.
Yeah. I mean, like, people will default to Amazon, which is a super convenient way of doing it. But yeah, don't worry, there'll be plenty of materials online within my feed.
Beautiful.
Chris, Sam, thank you both for joining us today. I really hope that we've got a listener out there that can be the next Message Labs. Catch you all next time.